This morning, we're looking at the CPP's manifesto. Now, on Saturday, the Convention People's Party launched its manifesto, where they talked about, some ambitious things, and we want to be fact-checking all of these things. And this morning, I've been joined by Patrick Stevens, who's an economist and investment analyst. Now, they talked about the mobilization of private sector capital for investment. Let's talk about, but one thing I want us to look at is the redefining interest rate by stopping borrowing. Patrick, good morning, and thank you very much for joining me.
Thank you very much for having me, Winston, and good morning to you and your listeners as well.
Good.
I mean, when they make such a pronouncement, fairly, you can say that is a strategy that makes sense, but you have to situate that within the current pressures that you have in the fiscal basket.
So let's situate that within the current pressures that we have within the fiscal basket, and tell us whether that's feasible and whether that's achievable.
Well, not within the short term, because the pressures you have at the moment, I mean, the government by close of 2015 was mobilizing something within the region of 48 billion, and statutory claims on that alone were nearly 42 billion. So plus or minus, the government has, nearly maybe something within the region of 10 billion to play with for all other social investments that they have to make. And so any claim like that, the stark economic reality is that it imposes short-term economic risks, and so it becomes challenging for anybody to say they are not going to borrow, maybe over the long term. And I think most of the projections they make over a 4-year period ending probably 2020, we can see some of these things happen. But in the absence of that, I think fairly we can say it's a strategy that everybody else will support, if you like.
So it's doable. Say if you give them 4 years, say from 2017 to 2021, they can achieve this.
Oh, sure. I mean, for sure. I'm sure even the current government, if you give that sort of long-term, horizon, they should be able to do it. But the problem is the existential risks that exist in the fiscal basket, vis-a-vis the sort of things that they are promising. Because if you compare, you realize that they equally make lots of promises for social intervention programs for people with disability and things like that. And I thought having those things in place, vis-a-vis the pressures that we have seen from commodity prices and revenue that government is not able to raise, these are not things that the CPP can control anyway. So clearly the pressures are real. So it's okay to say it. It sounds nice, it sounds exciting for the political discourse, but the short-term risks are real.
Okay, so it's more of a complicated thing.
Well, you can say that. I mean, it's complicated, unless, of course, the CPP can let us know what the modeling looks like, the factors they have considered in that, and then we can have some relative certainty. So with some margin of error estimations to show that, okay, they're doing A, B, C, D, and because of A, B, C, D, they will not borrow. But in the absence of that, I mean, it's complicated to have any sort of conversations around these things.
So then again, the CPP talks about the issuance of $100 million foreign denominated bond, and they say bankers lamentation about the effects of the issue as well.
So a couple of weeks ago, I think 2-3 weeks ago, the government issued a foreign denominated domestic bond. I think something around $98 million thereabout. And the idea for the current government was that, well, when they issue bonds on the international capital markets, usually they're expensive. I think the last one they issued around 9.25% on the yields, and the one before that 10.75.
Yeah.
So the argument that bankers started raising, because the government issued this, I think, at a rate of about 6%, and the price guidance that the government went to the market with was between 6.5% and 5%, and the government got 6%. Now the claim by the CPP is that the lamentation of bankers, which in my view is a very real one, because when the government begins issuing foreign denominated securities in the absence of the appropriate frameworks that either to support the issuance of these securities without risking things like inflation and people hoarding up the dollars so they can buy these government denominated securities, in the absence of framework to control that, you risk a situation where banks and the general economy will not have liquidity for import-driven related activities. What I mean is this: so I have lots of money, I can buy the foreign currency as a dollar and use the dollar to buy government securities. If there's no framework that controls that, and the government starts issuing these securities at ridiculous yields, at 6%, is not easy for somebody who's operating within the domestic economy. The CPP claims these, lamentations by bankers are not real, and their strategy for dealing with this is that they will issue the foreign denominated securities at the same yields as the domestic securities. I mean, that beats the mind of anybody who who pays attention to.
So that is not something you can do.
I mean, it's not possible because there's what you call interest rate parity that has got to be corrected with when people issue securities in foreign denominated in foreign currencies vis-a-vis issuing them in local currencies. If you look at the securities that government has issued today in the local currency, some of them have interest rates of, say, if you look at Treasury bill, for example, around 22% now. So why is that 22 and why is the foreign denominated ones having a yield of, say, 10.75, which is the highest we have issued? It is because there's a correction in the value of the currencies, what you call interest rate parity. So we have to make those corrections, and when we make those corrections, it is possible that if we take the arbitrage, then you can have some level of parity between the yields. But if you say you're going to issue a domestic security at 6% and issue a foreign denominated security at 6%, I mean that doesn't make any economic sense, because as an investor, if the government is going to issue securities, it's a matter of what the government's own economic risks are, what the demand and supply of funds within the capital markets are, domestically and internationally. And so that clearly is one of those things that you say political parties, when their representatives, they make these statements without any sound economic reasoning behind it. That's a complete false and complete bunkum, if you ask me.
So this is not backed by facts.
No, then there's no fact supporting this. There's no claim, and I think they even make the point that interest rates have been around 26%. I'm wondering what sort of interest rates they're using, because as we speak today, reports from BOG suggest that interest rates, the lending rates that the banks give to commercial markets, is around 33%. That's the last report that came out. Maybe they're talking about the monetary policy rate as a signal. Okay, now the monetary policy rate, consistently has been around 20% plus. I mean, from 19, and the big reference to some 20-year period. Actually, from 1996, I think we've had the policy rate decline significantly till from around 40% thereabout to about 12% when Kwabena Dufo was then finance minister. But then it picked up again, and these things happen because you have to balance that aggregate with other macroeconomic aggregates. And so when you use that as a signal, I'm not too sure the commercial market use that as a signal. It will determine the base rate for banks. That's fine, but beyond that, it really does nothing within the capital markets that we have. And so they claim that the concern of bankers regarding the issues that the government, the foreign denominated bonds the government is issuing, I mean, in my view, and based on the facts, I mean, I don't think they have an idea what they're saying.
Okay, well, you don't think the CPP has an idea what they're saying?
Because the facts don't support.
The facts don't support
that claim.
Fantastic. That's very good. Patrick, thank you so much for joining us this morning on Fact Check. I know that you have other engagements, and so we're grateful to you that you made time. We'll continue the discussions, and so one is complicated, one is false. The ones that we fact checked this morning, the claims made by the Convention People's Party during their manifesto launch. You have a lovely day, and thank you once again for joining.
Thank you for having me, Winston.